Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of November 24th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, going to wish you guys a happy Thanksgiving in advance. And last week, Maryland mortgage rates did move slightly lower as the bond market did rally off the support. If you take a look at the bond chart on the screen, you can see we were on a short-term trend down. The bond was trading down from the ceiling resistance, that blue line. Hit the level of support, bounced off it like we mentioned at the end of last week, and it did recover. You see the short-term trend now is for bonds to go up, which moves interest rates down. But they were capped again at that huge ceiling of resistance there, the blue line. They were capped there, and they were also capped by the stock market rallying on Friday. We're going to recommend, though, floating your Maryland mortgage rate to see if we can get some momentum to bust through that blue line, that ceiling of resistance. If it does, we could have a nice run higher, lower rates. Now, if it hits it again and bounces lower, we're going to recommend quickly locking your mortgage rate, because that means Maryland mortgage rates would move lower and go back down and test the floor of support. So, floating your Maryland mortgage rate to start the week. Now let's dig into those economic reports. The first one was a reading on inflation. Remember, we have to watch inflation because that's the enemy of bonds. And it was inflation at the consumer level with the Consumer Price Index, the CPI. It came out pretty tame. They look at the headline, which remained exactly the same at 1.7% year over year. Now the core, where they take out energy, that basically did move up slightly to 1.8%, but still well below the Fed's target of 2%. So tepid inflation is good for bonds. Now the Fed's favorite reading on inflation comes out this week on the 26th, and that's the personal consumption expenditure, the PCE. So we'll have to watch that. That's what they set their policy by, if that's measuring inflation or not. And then we saw on Thursday the weekly initial jobless claims come out. Jobless claims came out at 291,000 claims for the week. Now that was higher than expected, 284, but still well below the 300,000 mark. We got to be below 300,000 to keep the labor market on track. Now last week's claims are the claims they're going to use. That's the week they're going to look at when they do the jobs report, which will be coming out shortly. The November jobs report will be based on that. So based on last week's jobless claims, we're expecting over 200,000 jobs will be created for November. So we'll see what happens when that report comes out. Now, in other economic news, the European Central Bank's president, Mario Draghi, announced that they would begin their own asset purchase program up to 1 trillion euros. That's very similar to the Fed's program, QE3, that just ended. So they're going to buy asset-backed securities to help stimulate their economy, help the stock market. When that happened, it pretty much on Friday rallied the bond market and the stock market, and that's what capped mortgage bonds from going any higher. And in housing news, had some good reports. The first one was existing home sales for October 2014 rose by 1.5% from September to 5.26 million units on an annualized basis. That's the best level since September 2013. And then the median existing home price for October 2014 was up to $208,300. That is a 5.5% increase over October 2013. That is a very sustainable rate of increase. That's around the historic average. So that's good supportive news for existing home sales in the home market. And then we had 3 reports on new home construction. The first one was the National Association of Home Builders Housing Market Index. That did jump up to 58 from 54. That's a good rebound because it was up in September and dropped down. Now, this measures how well builders feel about new home construction. Anything above 50 is considered positive, so a jump up to 58 means they're feeling really good about new home construction going into 2015. And then we saw building permits come out for October 2014, and they were up 4.8% to 1.08 million units on an annualized basis. Now, permits measures future construction because that means they're applying for permits to start building homes. Now, there was one of the 3 reports wasn't as good on the surface. That was housing starts. This is when they actually start breaking down for October 2014. It did fall by 2.8% from September to 1.008 million units on an annualized basis. But when you dig into the report, it wasn't really bad for us because the drop was mostly from the drop in multifamily housing starts. We're really concerned with single-family housing starts, and they were actually up 4.2%. So not bad there. Housing starts, building permits show a good, robust housing market for single-family homes. Now, in the local news, the next first-time homebuyer seminar is coming up in Frederick, Maryland on Saturday, December 13th from 10 a.m. to noon. That's at the Hampton Inn. And then we have one after that coming up on Wednesday, December 17th in Laurel, Maryland. And that's from 6 p.m. to 8 p.m. at the North Laurel Community Center. And the next one in Towson, Maryland is Saturday, December 20th, 10 a.m. to noon. That's at the Sheraton Baltimore North Hotel right there on Delaney Road. Now you can register for either one of those events, but give us a call in the office, 410-412-3319, or register online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.